I was meant to be beautiful. The world would have looked to the sky and seen hope.
What's good, everyone? Welcome back to yet another video. And as you know, if I'm making a YouTube video, I probably had a really good trading week because you guys don't pay me enough, so I have to pay my own bills. I have to pay myself in order to do this. And yeah, this week I had a really blessed week. Basically made just around 2,500 from my live account. There's the actual withdrawal to the bank, and then a $2,000 request that's still waiting on funding pips, or 1,960 if we're gonna get technical. So yeah, I had a really good week, just like 4,500, a little over 4,500, and the main thing that I was trading was gold and buy side. As I've been making a ton of videos about, like, you're missing out if you're not taking advantage of the buy side on gold. It's just going in one direction. And I wanted to do a trade recap because I also sent out one of my trades, and then I also took some trades in one-on-one calls. And it's literally Tuesday, right? And I already had a blessed week. The payout on funding pips was from last week, but the actual live account withdrawals were just yesterday and the day before. So basically Sunday and Monday. And I just wanted to hop into this trade recap, kind of do a little analysis and go over one of the models that one of my students sent me. And he's like, what do you think about this? So I decided to make a video for him and just like kind of go over this for you guys as well. So just right off the bat, when I read this, I already sent him a message. It was like from number one, there was also already something that like I noticed right away. Mark off 4-hour highs, lows, or previous day highs and lows, if not already taken out, and then 4-hour, 1-hour FEG. So the first thing is that he starts off with a specific time frame that he's looking for. So 4-hour highs and lows, 1-hour highs and lows. So the first thing is, like, if you're looking for a specific time frame, same thing with like this right here. Wait for a 5-minute confirmation confluence. So you're already restricting yourself because you're pointing to a specific time frame that you need for the model. And one of the things that I always say whenever somebody asks me, yo, what's the best model? The thing is, there is no best model. You learn price action and you adapt it because the market's going to be different every day. Maybe this week, every single day of the week, there was 5-minute confirmation, right? And every single time you'd look for your trade, the confirmation would be on the 5-minute time frame. Great, right? But now you think, oh, it's just going to be on the 5-minute. I'm going to stick to the 5-minute. Like, the thing that I've learned over time is that the market's going to be different all the time. So what you have to do, instead of like pointing to a specific model with specific time frames, you have to adapt. You have to learn to like know what to look for and adapt it based off of whatever time frame it's showing itself on. You don't look for a 5-minute time frame. The other thing is he's looking for higher time frame liquidity, but then for fair value gaps, all he's looking for is 4-hour, 1-hour. So that's the biggest flaw right there. You're missing the daily time frame fair value gaps, which is the most important thing. If I was to make myself a trade plan, that's what it'd be. I'd start off by saying, look, find the highest time frame FVG that there is. And then the second flaw that I notice is, look through this entire thing. Does he once talk about time? No, but time is the most important thing. He talks about liquidity of specific sessions, but the actual thing is that you do not want to be trading unless it's a specific time, and that is sessions. So the second most important thing is wait for a session. You don't care whatever market's doing if it's not inside of a session. And the third thing would be wait for it to start leaving the daily FVG that it's in, right? It already hit a target. You might have another daily FVG to target, maybe you don't. And then the fourth one, look for confirmation. I'm not going to say look for confirmation on a specific time frame. For me, if it was a specific time frame that I would look for, it would be the 30-minute time frame. Why? Because without a 30-minute fair value gap, there's not enough volatility in the market for me to take the kind of positions that I want to be trading. For 5-minute, maybe there will be for you, right? But me, if you guys know anything about how I like trading, it's that I like to go for a really big, like TP. I want to hold my trades for a while. And I use a session and I use a specific scalp to get me to that profit target. No matter how far it is, I have to find the 30-minute time frame because that's the minimum requirement for me to see volatility in the market. So that's one of the things that I'd say is a non-negotiable for me. And that confirmation is an IFVG. So you don't say wait for 5-minute IFVG confirmation. You say wait for IFVG after it starts running, because the IFVG can form on the 15-minute time frame. So if you're only restricting yourself to the 5-minute, and the 5-minute creates an IFVG, but there's also a 15-minute fair value gap right there, it's kind of hard to like show you guys an example of this. But if I was to try to show you guys an example, it'd be like this. So let's say 30-minute time frame right here, there's a bearish fair value gap. But on the 15-minute time frame, there was a FVG right here, and let's say it closed over it right here. So you're already thinking, okay, this is a 15-minute IFVG, let's go long from here. But on the 30-minute, it barely tapped into it. It did not create an IFVG on the 30-minute. So obviously it's going to respect the 30-minute and actually go down instead, right? It's not going to respect this 15-minute IFVG when there's a higher time frame. So what I'm trying to say is that you don't look for 5-minute when there could be a 15-minute. You just adapt. You go to the highest time frame possible that there is something, and you use that thing. Okay? So, next thing. Continuation hit, wait for 1-minute confirmation confluence. So I'd say once you already got that 5-minute confirmation after like a 30-minute fair value gap forms, it taps into it. You already know that the daily fair value gap's pushing higher. Then you don't necessarily need the 1 minute, but what you can do is if you want a very specific entry, you can wait for a macro, the 20-minute macro period, or you can wait for a IFVG on the 1 minute after you already entered to see like the confirmation. It's a little difficult for you guys to do this at first, but some things that I do is like if I enter early and then it runs up and then it doesn't create the IFVG on the 1 minute time frame, I close my position. And most of the time I'm right because it's not time yet. It doesn't create the lower time frame confirmation. It ends up going back down. So it's just simply not time yet, and I use the 1 minute to confirm whether I hold my position or I close it early and try to find another entry. This doesn't mean I'm going to stop trading because I didn't create the IFVG on the 1 minute time frame. I know that the 30-minute, the 1 hour, the 4 hour, the daily is going to take as long as it needs to go to the target. So the lower time frame is just showing me whether I should be in right now or whether I should wait until later to get in. Okay. SL where trade idea wrong. So above, I'm not sure what he means by that. Above, below 5-minute confirmation, confluence of the liquidity sweep. Usually for stop losses, if you have a fair value gap that you're entering from like this, you basically just put your stop loss above the high of the fair value gap. Like the high of the candle that formed the fair value gap. And it's going to be different all the time. If it's obviously a 5-minute, it's going to be a lot tighter than that, right? Because it's a 5-minute FVG. So if you get in from a 5-minute FVG, you can put it above like the highest swing high. Because the fair value gap in itself is already supporting price. So you just need to kind of drag your stop loss. And if you get stopped out, but it keeps respecting the fair value gap, like what happens a lot of the times when I get stopped out is when market wicks below into my stop loss and then pulls all the way back and closes inside of the fair value gap and keeps respecting it. I get in again. I'm fine with taking a loss because I know that my target's up there. It can take a while. It can manipulate to take out all the other like scared buyers. That's part of the game. You're going to take losses. You just have to be confident in what you're looking for. And then let's do a trade recap. So one of the trades that I actually did send out this week was this one. Last night I was just like, I'm looking for a buy during the macro. And I'll explain exactly what that means. 350 to 410 macro. It's a London session. There's a 4 hour, the big fair value gap right here is a 4 hour, and this is a 30-minute time frame. So I was talking about this 30-minute FVG that's right here. So if we go and look at what actually happened yesterday from that 30-minute FVG, that's exactly what we were looking at right here. So once it started running into it, boom, it swept to the liquidity, and this was like, it started running. So first of all, look at this. Beautiful, right? Wicked a little lower, but obviously it's going to expand because it's a 4 hour bullish fair value gap. And the next thing that we would aim for would be the next fair value gap on the 30-minute time frame. So if we're taking a trade from the 30-minute FVG, look for the next 30-minute FVG, which was right here. And that's exactly what we entered in. And I would have made a really nice amount of money on my live account last night if I hadn't fallen asleep because I forgot to close my position. I forgot to close my position. My TP was a little bit higher. But honestly, if I saw this right here, tap into it, start melting, I would have closed my position. but I didn't because I fell asleep literally. I was just trading. It was hella late, and I was like barely staying open on my phone, and I fell asleep. Didn't close the position, but it is what it is, you know? So we ran up from this 30-minute FUG, and what I meant is macro. So the macros are when we usually sweep liquidity, and if we sweep liquidity during a macro, it's high probability. And there you go, 350. So at 350, that's when the move started. 350 is the beginning of a macro to 410. So inside of this 20-minute period, I was looking for a sweep of liquidity, and that's where I entered. And I got in from this 30-minute FEG, as I mentioned, and already we got an amazing move up. And the target was just simply up here. That's all I was aiming for. And that's exactly what we got, and I'm just upset that I was asleep. So in this time, there was like 3 a.m. for me. I'm 3 hours behind EST. So 6:20 is when I hit it. And that's just very upsetting, honestly. Because when you're right, but you just simply, like, it's not even a matter of execution. Some people, they know where it's going, but they get in a bad entry and it takes them out. For me, it's the fact that I had a good entry. I actually executed on what I knew. I was right, and the only thing was that I didn't close the position because I fell asleep. So it is what it is. I had a really good week already. That would have just been the cherry on top. I think my live account was at like 3,000 or 4,000 right here, which is crazy to think about. That would have been another 3K withdrawal for me right there. So yeah, that's the last trade that I actually sent out this week, and I'm not sure if I'll be looking for any other trades because it is obviously NFP week and we're approaching Wednesday. So it's already inside of Wednesday Asia's session in just an hour. So I'll just be looking for some trades on a funded account. Once I get that thing reset, and then I will be also trading a challenge account. Other than that, I think I'm done for the week. And it is also a new quarter, right? Because the 3-month for Rally Gap closed. Or 3-month candle closed and a 3-month for Rally Gap formed. Let's see where this actually is. So there is a 3-month for Rally Gap right here on gold. I don't know if we will actually pull all the way back down into this one. I don't think we should, because the returns on gold should be actually even higher during the month of April and May, higher than this one. So if this was insanely bullish, then these two will probably be even more bullish. So I'm just going to continue looking for buys. I'm going to continue looking for like whatever time frame that we get for Rally Gaps on that we can trade from. So let's see on the daily. Maybe we might wake into this for a Rally Gap right here because it is already pretty close. So all I have to do basically now is go to the 30-minute time frame, wait for some confirmation for sell side. Like here we have a fair Rally Gap. So if it's meant to go down to this daily fair Rally Gap, you mark out the daily fair Rally Gap, and you know exactly where it's at. So if it's right here, now you wait for the first session that comes along that aligns with your time zone. You don't just trade any session. You trade the session that aligns with your time zone that you can trade stress-free. And if you think that it's going to go down here, you wait for that higher time frame confirmation, and then you take the trade from your higher time frame confirmation to the daily target that you have. And then close your position, go long. If you don't want to sell because gold is a buy-side pair, and there's always those things where it's like it's running down, you think, oh, it's going to keep going down, and it just flips around, runs up, takes everybody's stop losses out, and then it goes down. You know, that does happen on gold all the time. And if you don't want to be on the sell side, wait for it to just go down here, and then you could take your buy from a high probability position. Or during Asia session, if I don't get the IFEG from this 30-minute bearish or bullish for Rally Gap, then I'm not going to sell. I'll buy. But if I do, then that's going to be a beautiful trade for sells and then for buys. So that's it for this trade recap. I'll catch you guys in the next week.